Ray Dalio, a self-made billionaire investor and renowned economist, recently voiced his concerns about the potential for a large-scale global conflict. Over the past 2 years, he has increased his estimate of the likelihood of such a conflict from 35 to 50 IUA. Dalio shared these thoughts in a LinkedIn post titled "Another Step Toward International War," where he emphasized growing tensions resulting from geopolitical events involving Israel, Hamas, Russia, Ukraine, China, and Taiwan. He points out that the current escalation marks a significant turning point in the establishment of a new world order and highlights that these events are not isolated incidents, but part of broader global power dynamics reshaping the world. DCO draws parallels between the current geopolitical atmosphere and the situations leading up to the two world wars of the 20th century. He expresses concern that these issues between Israel, Hamas, Russia, and Ukraine are not isolated conflicts, but indicators of larger power struggles that could potentially draw on allies and lead to more extensive wars. He also highlights the indirect involvement of the United States, suggesting its participation in proxy wars in Europe and the Middle East while preparing for potential conflicts in East Asia. The expansion of these conflicts could involve even neutral countries, further increasing the scale and devastation. DI hopes that global leaders will come together to understand the catastrophic consequences of war and work collaboratively to prevent it. However, he remains skeptical about the possibility of achieving this idealistic outcome and suggests that a large-scale conflict may be inevitable. Amidst this chaos, Ray Dalio is actively investing in 3 stocks to secure a safe and substantial return with minimal worry. The first stock he's investing in is Johnson & Johnson, ticker symbol JJ, a well-known healthcare company that is focusing on its pharmaceutical and medical technology sectors. JJ is considered a prime defensive stock choice in the face of current market uncertainties, offering a stable 3 dividend yield and a strong track record of dividend growth. The second stock in Dalio's portfolio is Visa, a dominant force in electronic payments. Visa's strategic foresight and competitive edge in the digital payment realm make it a compelling investment choice, especially as electronic transactions continue to surge in a post-pandemic world. Despite its solid performance, Visa's stock is currently priced at a 14% discount from historical norms. The third stock that Dalio is actively purchasing is Alphabet, also known as Google. Google's strong position in information and search, as well as its advancements in artificial intelligence, make it an attractive long-term investment. Google's chatbot Baird has shown remarkable growth and has certain advantages over competing models, contributing to Google's credibility in the AI space. Despite its potential, Google's stock is perceived as undervalued in the market. Overall, Ray Dalio is strategically diversifying his investments in these companies to secure stable returns and mitigate risks in the volatile global landscape. He was particularly interested in Google's potential in the realm of artificial intelligence. Google's Bard chatbot is experiencing rapid growth, which sets it apart from competitors like OpenAI's ChatGPT, which seems to have reached a plateau in its growth. Google's Bard chatbot offers several advantages, such as its ability to access and use more current information from the internet. This real-time data advantage, combined with Google's vast data resources, can enhance digital advertising by providing insights that might otherwise go unnoticed. Google's DeepMind is also making significant strides in the field of AI with its product Gemini. Unlike most existing AI products that are limited to text, Gemini is expected to handle various data types, including text, images, and complex code. This versatility positions it as a groundbreaking innovation in the AI domain. Data shows that while ChatGPT continues to dominate the generative AI scene, its growth has slowed down. In contrast, Google's Bard has experienced exponential growth, solidifying Google's credibility in the AI space. This growth trend can be attributed to Google's superior AI offerings and the impending introduction of Gemini. Despite Google's strong position and potential for growth, its stock currently trades at a valuation lower than other major tech companies. However, when considering the company's genuine economic earnings, the valuation appears even more attractive. Analysts project an annual return of around 12 over the next 3 to 5 years for Google based on various factors, including the company's return on capital employed, ROCROs, and reinvestment rate. In summary, Ray Dalio is strategically investing in Johnson & Johnson, Visa, and Alphabet Google to secure stable returns in a world marked by growing global tensions and economic uncertainties. These investments reflect his belief in the long-term potential of these companies to weather the storm and provide investors with reliable returns.